Stock markets in Europe are trading on the soft side this morning, with the UK's FTSE 100 index off around about 20 points, while the Euro Stoxx 50 index is lower by around about 5 points. In the commodity space, gold is down about $2. Oil prices are also easing. In the FX space, it's very quiet, and when it comes to peripheral bond yields, both Spanish, Italian, and also the Portuguese 10-year bond yields are relatively calm. And in the core government bond space, UK gilts and German bonds are slightly in favour. Good morning, I'm Ishaq, Siddiqi, and welcome to your daily market bite. I'm going to give you a quick idea of what's going on in financial markets today. So we had a pretty weak close in Wall Street on Friday. Overnight in Asia, we had decent gains, and that was on the back of some Chinese data, the HSBC flash PMIs for the manufacturing industry in China. Now they jumped to a 6-month high, indicating that the Chinese economy is continuing to grow in the right direction. This comes after a very shaky first half of the year for the Chinese economy, so investors are somewhat reassured that China is now heading towards the right direction. Policymakers have done the right sort of stuff to implement growth measures, from turning the Chinese economy from a spending-based economy to more of a consumption-based economy, and now we're looking like it seems like we're going to get some sort of soft landing scenario in China as opposed to a hard landing scenario, where GDP for 2013 should remain above 7.5%, which is very encouraging for the market, as earlier this year we were expecting GDP for 2013 to fall below 7%. Now, going back onto what happened over the weekend, we had the German elections. Angela Merkel, the Chancellor, won again. She won by 41.5%. And it was just fell short of an overall majority in Germany, which means that she's going to have to find a coalition partner. Seems like she's probably going to go for one of her leftist rivals to form a greater coalition. Now, when it comes to the actual elections, no change to the status quo in Germany at the moment, which is somewhat welcome news for the market, as investors are hopeful that Germany is going to continue in its path of growth. It is the engine of the Eurozone. It's shown a very good recovery over the past few months, and it's going to be driving the recovery in the Eurozone itself. And at the same time, as long as the Eurozone periphery remains on top of their budget deficit targets, and at the same time continues to adhere to their stricter austerity measures and structural reforms, then there's nothing really to be too worried about, although we are starting to see some concerns in the market about what's going to happen next for Greece. Are they going to need another bailout or not? And if so, what does that mean for the wider Eurozone periphery? But on the whole, the elections themselves are not affecting price action at the moment. It's more so the data out of China that is being digested by the market. That said, we are weaker. We have started on a bit of a downbeat turn, and that's a bit of hesitation ahead of some of the Eurozone PMI numbers that are coming out today. We have flash PMIs from across the board, from France, Germany, and the Eurozone itself. It's pretty low on the data side in Europe, and that's the same case for the US. We do have ECB Chief Mario Draghi speaking later this afternoon, and on top of that we have Fed members Lockhart and Dudley also taking the mic and giving some insight over Federal Reserve policy. They're going to be in sharp attention, given the fact that last week the Federal Reserve held back from tapering asset purchases. So a lot of focus shifting to the Fed now. It still remains a narrative. The market is still somewhat concerned and worried about when the Fed is going to pull the first, fire the first round of tapering. Will it be next month, or are we going to have to wait until the end of 2013, or we're going to have to wait till 2014. Other than that, not much else to say, so enjoy your trading day, and I will see you guys tomorrow. Cheers.